Hey you guys, this is the beginning of my trading for dummies, trading 101, trading course, trading information, trading journal, trading whatever you would like to call it, okay? Okay. I know a lot of you guys did come from my TikTok. If you're not following me on TikTok, I will have my socials listed. I do have a Discord. Obviously, it's called All In. I will drop that link as well. It's free. I was going to do a paid Discord, but I decided against it and just decided to drop videos on YouTube. So let's get ready to learn. Let's go. Let's go. Okay, so this course is for complete beginners, traders who struggle to be consistent, anyone trading futures, forex, or options with your stocks. So you'll learn market fundamentals, chart reading, trading strategies, risk management, blase, squaze, all the good stuff. All right, so I explain trading in AKA terms, layman's terms, nutshell terms, but I'll read buying and selling assets to profit from price movement. I trade futures, I don't trade options. My terms is making an educated guess on if price is about to go up or down using research and strategies. We're not investing, which is long term. We are trading, which is short term. Okay, okay. Trading myths. Trading is not a gamble. It is not easy money. It does require skill, discipline, and consistency to be profitable. I do not define trading as gambling because we are literally using research and strategies because the market repeats itself. Versus when you're gambling, you're just making a guess. No knowledge, no strategies. It can't be proven to just repeat itself time after time after time how trading can be. But if you choose to say that it's gambling, I'm not here to argue with you or anyone. I'm here to rob the market and not let the market rob me and help others do the same. Okay? Okay. So there's different types of trading: day trading, swing, scalping, long-term investing. I'm a day trader. I scalp. All right. I know y'all like, girl, but some people don't know this stuff. So you gotta explain it. Swing, holding for a couple days, scalping, in and out real quick. Some people they scalp for a couple seconds. Some people they scalp for a minute. All right. All right. Position trading, long term, real long term. Day trading, in and out within the same day. In layman's terms, aka terms. Do that make sense? That makes sense. In and out the trade. Okay. Most traders fail because they have no strategy, no risk management, emotional trading, over leveraging, and not understanding trading psychology. I tell people all the time trading is more mental than it is charts. I didn't even remember that I made this slide explaining that trading is a skill, not gambling. So please have realistic expectations. And then I gave y'all an example. You can make 5,000 today, 500 tomorrow, and be negative 500 the next day. I need y'all to be realistic. Please be realistic. Losing money, that's a part of the game we playing. The goal is to make more money than you're losing. Trading is a probability game. Okay? A probability game. So you want to win more than you lose. If you're scared of losing money, this ain't the thing for you. This is not it. There's no 100% that you're always going to win. You can literally win every trade for 60 days that you enter, and then day 61, negative. Okay? Okay. There's different trading sessions, meaning there's different times that you're able to trade where the market is open for you to trade. There's Asian, London, New York session. Different sessions, different volatility. I already talked about the different type of markets. So stocks, which is options, Monday through Friday, 9:30 to 4 p.m. Eastern. Futures, Sunday 6 p.m. till Friday, 5 p.m. Eastern. They close every Monday through Friday from 5 p.m. to 6 p.m. Forex and crypto 24/7. I don't know much about Forex. I'm sorry, I don't know much about crypto. And I haven't traded Forex since years ago, so I don't trade Forex. Futures is my baby. We buy and sell contracts at a set price. You make money if the market goes up or down. Prices are set for how much you will make or lose depending on what you're trading. That is a website, cmegroup.com, that help you identify exactly how much you will earn or lose depending on what instrument that you're trading, or ticker, whatever you would like to call what it is that you're trading. Are you trading gold? Are you trading NQ? Are you trading YMES? That's what an instrument, a ticker, that's what that is. A lot of words are used interchangeably. You will learn that. All right. Does this all make sense? Okay, bet. Now don't say I ain't warned y'all. Now from here. Okay, guys, we're going to talk about trading terminology. If you would like to screenshot this screen, you can. You don't really have to because, of course, I have other screens that will go into definitions and dive a little bit deeper. So let's get ready to dive deep. Okay, so what is a trend? That is showing you how the market is moving. Is price going up? Is it going down? Or is it kind of just staying the same or bouncing between two prices, which we would consider two ranges? Okay. So if price is going up, price is in a uptrend. So if you hear someone says the market is bullish, that means price is in a uptrend. Think bull, like the horns on a bull, up. You hit a bull, it's going to go up. Okay. If price is going down, it is in a downtrend, which means price is bearish. What do prices do? I'm sorry, what do bears do when they hibernate? They go down. I got that from Aleah. Yes, I did. Now, if price is not really going up or down, it's going sideways, which means price is consolidating or choppy. We will look at this on the charts. So the type of trades that you're putting in, if you think that price is going to go up, that price is what? Bullish, you're going to put in a long or a buy or a call. All of those are used interchangeably. Some people use calls, some people use longs, some people use buys interchangeably. If you think price is going to go down, you're going to put in a put, a short, or a sell. So if you hear those three, price has what? And what type of trend? Uptrend, downtrend, or sideways? Downtrend, right. Green, bullish. Red, bearish. All right, that makes sense? All right, cool. Candlesticks. Candlesticks represent price and where price have been. So a green bullish candlestick, these are the wicks right here. Oh, it's over here. These are the wicks. And this is the body. The most important part is the body, because that's where all the momentum is. So that's the most important part, but we will dive into that later. Price on a bullish opens right here, closes right here. This is the lowest that the price have come down, and this is the highest that the price have come down. I'm sorry, gone up to. All candlesticks do not have wicks because sometimes price will open here, get up here, and close right here. Or sometimes price will open here, because we see on a bearish candlesticks, it opens at the top and then it closed down here. Sometimes price might open here and get here and close right here, or it might just have a wick on one side. Does that make sense? This is a bullish candlestick. This is a bearish candlesticks. Bullish candlesticks open at the bottom and bearish candlesticks open at the top. Does that make sense? Okay. Again, candlesticks represent price and where price have been within a range or a time frame. We'll get into time frames in a minute. Oh, we into time frames. So Tradingview is a charting platform. So time frames, basically, there's different type of time frames: hours, minutes, days, weeks, months, whatever. So the candlestick represent price within a specific time frame, depending on which type of time frame you're on. We'll get into that in a minute as well. Some of the information that is in this slideshow we have already covered, but we're going to just go over it again. Charts are where you view price and what price is telling you. Price action. Price is represented by candlesticks. Tradingview is a charting platform that we will review. You can have a line, a bar, or a candle on your chart. I typically use candle. Sometimes I might use a line. I don't use this bar. Candlesticks show where buyers and sellers are present. Green represents buyers and red represents sellers. Buyers push price up, sellers push price down. Price action is the language of the market. We already went over a bullish and a bearish candle. Again, Bullish, open at the bottom, close at the top. Green, open at the bottom, close at the top. The lowest price that a bullish candle has reached, the highest price that a candle has reached. We know that bearish candles open at the top, close at the bottom. Still, the lowest price that a bearish candle has reached or touched, the highest price that a bearish candle have touched. We know that this is the wick, and we know that this is the body. Most important, the body. Okay, wick, that means price touched that area or zone, but it did not close there, meaning price has been rejecting from that area. Hold on so you can see my mouse because I want to show you some stuff. Okay, so this is a long rejection wick, meaning price opened at the bottom, closed right here. But price went all the way as far as right here. Okay? But the sellers pushed price down and it closed here. Vice versa for here. Price opened at the top, but closed here. Sellers pushed price all the way, had price down here. They were in control for a moment, but buyers stepped in and said, no, we ain't going to do that. And it closed right here. These show rejection. Price went up here and rejected. It could not close here, could not hold here. It closed here. This shows rejection. Price opened here, went all the way down here, but it could not stay in, them sellers couldn't stay in control. The buyers pushed it up and it closed right here. Make sense? All right, cool. Long wicks, short wicks. Small body, big body. Small body, big body. All right, cool. Bullish, price going up. Buyers in control. Bearish, price going down. Sellers in control. So this is the most bearish because there's no wick. Everywhere that price touched is within the body, is within here. Same thing for bullish. So let's start over here. Price opened at the top, closed at the bottom because them sellers in control. So price opened right here, closed here. Okay? But price had got way up here, right? Buyers stepped in because it opened here. Buyers stepped in and had started pushing the price. Buyers stepped in, started pushing the price all the way up. But them sellers said, nah, we're going to go right down here and we're going to close right here. When you see these long rejection wicks, a lot of times, most times, almost all the time, price is about to, I don't know if I ever seen a rejection wick where it didn't. If it leaves a long one, price going to go down. It may not go down for weeks or days or whatever, but price is going to go down. Does that make sense? Okay, this is normal. Leave a little wick, leave a little wick. This is neutral. You don't know what's going to happen. Just pay attention. Now, let me show you why this is the least bearish. Remember, price open up here, close right here. Sellers were in control. And how do I know that? Because it opened here and it got all the way to right here. But then buyers stepped in and said, no, no, no. We're not letting price get that low. Like we let it get a little low, but not that low. So buyers pushed it up and said, you can close right here. And then it left this long freaking wick. That means what I just told you about these wicks. It's wicking at the top. Oh, yeah. We about to go on down. It's wicking at the bottom. Oh, we about to go on up. Which is why them sellers not still in control. Because if so, the sellers would prefer it to, hold on. Let me get my mouse back over. If sellers were still in control, it would have closed down here somewhere, not way up here. And then it's the same thing for bullish. Opened here, closed here, cool. Opened here, them sellers stepped in and pushed it way down here. But them buyers said, nah, we're not playing like that. We're not going to let price go way down there. We're going to go way back up, close here. And then this long rejection tells us, hey, we about to go up, baby. Cool. Normal. Be mindful because this is neutral. You don't know if price about to give you more green or red candles. And then again, why is this the least bearish? The least bullish candle? Because price opened here. It had buyers had control. Buyers pushed it all the way up here. But then sellers stepped in and said, nah, we're not letting price be way up here. We're going to push it all the way back down here. And this way you can close that. And then it left this rejection wick to the top. So if the rejection wick is at the top, we're looking for price to go on down. Okay? Okay. Candle patterns. There may be more patterns. I'm not a pattern trader, but if I was, and when I did, these are the only two that I would trade. Double bottoms, a W. Double tops, a M. That's it. I don't look for these. I don't, nothing. I just feel like once I show you guys the charts, you're going to notice that W's and M's are likely to be seen on the charts. Time frames. So there's higher time frames, there's lower time frames. When we pull up Tradingview, we will review different time frames. There's 1 hour, 4 hour, 2 hour. The highest would be the 4 hour, then the 2 hour, then the 1 hour. Now you see how I went from 4 to 2 to 1? Top down analysis is when you're going from higher to lower time frames, analyzing the market to see what is price doing on the higher time frames to match up with the lower time frames. Multiple time frame analysis, using multiple time frames to actually analyze the market before you enter in trades. The time frames that you use depend on the type of trader that you are. Setting up your charts on Tradingview, we will discuss indicators, notes, rules, your drawings, and any other thing that comes to mind. Indicators are tools that help you identify the direction that price is heading. Are they accurate? Yeah, for the most part, but there is a delay. They use math and past history to determine direction, but I don't really use them. We can review some on Tradingview.